Ladies and gentlemen, good day and welcome to Q4 and FY24 conference call of Virtuos Advertising Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. We have with us today from the management, Mr. Hiren Kumar Shah, Promoter and Whole-Time Director, and Mr. Ashish Shah, Director. I now hand the conference over to Mr. Hiren Kumar Shah, Whole-Time Director and Promoter, for the opening remark. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I would like to wish you all a very warm welcome to Virtuos maiden earnings conference call for the fourth quarter and year ended 31st March 2024. I would like to begin by expressing my gratitude to you all for taking the time to join us today. We have on call Mr. Ashish Shah, Director of the company, with us today, and Adfactors, our investor relation team. It gives me immense pleasure to address you all today as we stand on the cusp of spectacular growth journey. Since this is our first earnings conference call, I would like to share a brief overview and history of our company and some recent developments before we get into the business and financial performance. Little brief background about the company. In 2012, we formed Virtuos in India and opened our first international office in the US. Over the years, we developed several innovative technology solutions for display and mobile advertising through our programmatic platform, IngeniousPlex. In 2017, we made history by becoming the first Indian publicly listed ad tech company on the NSE Emerge board and moved to the main board in 2020. We continued to innovate with the launch of PubNX, which is now IncrementX, Adzurite, AdMozart, expanding our suites of services. Our efforts were recognized when we received the prestigious Emerging Brand of the Year Digital Marketing Award in 2022. We introduced our suite of offerings for CTV and DOH media markets. In 2023, we made headlines with the announcement of merger with PayNX and Qualispace and a significant investment in Silvertech Web Solutions, which is now Performance. The integration of cloud tech services into Virtuos through the merger and acquisition of the PayNX technologies and Qualispace Web Services. This strategic move has enabled us to incorporate a comprehensive range of digital identity and cloud offerings, such as domain name, SSL, web hosting, VPS, public and hybrid cloud, enterprise email offerings, including B2B domain reselling, domain registration, domain hosting, and more. Together, we call them Cloud Tech, which joins our existing bouquet of MarTech platform. Cloud Tech now complements our existing MarTech media and advertising platform. This integration positions Virtuos as a partner for businesses to leverage digital technologies for both cloud and advertising services, significantly enhancing their business outreach. Today, Virtuos is a leader in digital advertising, with proprietary platform that drives marketing and advertising success. Our recent addition of cloud tech offerings has positioned us as the preferred go-to partner for businesses to leverage digital technologies and online presence. Our key platform includes, number one, IngeniousPlex, which is a self-serve media buying platform for marketers and their ad agencies. Number two, IncrementX, which is our niche audience representation and monetization platform for publishers. Number three, Adzurite, which is a performance marketing platform for marketers, publishers, and affiliates. Number four, AdMozart, which is a real-time ad exchange platform for demand and supply partners for the ad tech ecosystem. Number five, Connect Reseller, which is a domain and web presence product distribution network. Number six, Qualispace, which is a cloud solution platform. While the first four, IngeniousPlex, IncrementX, Adzurite, and AdMozart, falls under our MarTech segment, and the two, Connect Reseller and Qualispace, comprise our cloud tech business. Virtuos empowers businesses with a suite of advanced services designed to optimize performance and drive revenue. Our media and monetization platform bridges the gap between publisher and advertiser, using the AI, artificial intelligence, to enhance revenue and maximize ad spend impact. Our marketing advertising platform leverages data-driven insights and innovative strategies to deliver targeted campaigns and maximize ROI. We provide essential digital identity solutions for secure domain management, helping business build a strong online presence. Additionally, our scalable cloud infrastructure service supports digital transformation, optimize efficiently, and reduce cost. We play an instrumental role for businesses to go digital and optimize their online advertising and cloud services. Our growing network includes various corporate digital marketers, advertising agencies, digital publishers, cloud providers, and technology companies. Our journey has only just begun, and we are expecting an exponential growth trajectory based on our strength and the industry opportunities. Now, I would like to hand it over to Ashish to take us through the key developments over the recent past. Ashish, over to you.
Thank you, Hirenji. Good evening, everyone. The past year has been incredibly exciting and transformating for us at Virtos. We have made significant stride in expanding both our product portfolio and our global footprint. In terms of geographical expansions, we have made substantial progress in widening our reach in the United States, which is our key market. This part of our strategy to win more projects and capture larger share of the United States market, where we see tremendous growth opportunities. Our expanded portfolio will help us gain further traction and increase our market presence in this key region. Domestically, we also opened our new office in New Delhi, India, during the last quarter, further strengthening our presence in the region. Through the past quarters, we have continued to grow with the recent addition of PayNX and QualiSpace. We expect this to accelerate further, enabling us to capture a larger market share. At Virtos, innovation is our DNA. We continuously invest in research and development to stay ahead of the industry curve. Our employees are our greatest assets, and we are committed to maintaining an industry-leading talent pool. In recognition of our efforts, we were certified as a great place to work in December 2023, highlighting our dedication to creating a positive and productive work environment. Moreover, in October 2023, we were honored with HT Achiever Award, recognizing our outstanding achievements in the field of EdTech. Our overarching goal is to be the preferred partner for businesses looking to enhance their digital and online presence. We have already started capitalizing on the immense opportunity and growing demand, which is reflecting in our results. We are exploring further expansion initiatives to scale our business globally. Throughout this journey, our focus remains on delivering sustainable value for all stakeholders. Our annual performance reflects the kind of growth that Virtos is capable of. We foresee further accelerated growth in coming year. Thank you for your continued support and for being part of our exciting journey. Together, we look forward to achieving even greater success. I now hand it back to Hirenji to walk us through the company's financial performance.
Now turning to our financial performance, quarter 4, financial year 2024. Our revenue in quarter 4, financial year 24 increased over 33% year-on-year to rupees 45.7 crore. Growth was driven by added businesses from the recently merged entities of PayNX and QualiSpace, as well as the general business expansion. Our EBITDA, excluding other income for the quarter, stands for 6.66 crore, while EBITDA margin is 14.58%. Strategic investment in our talent pool and marketing initiative had a bearing on the margin, but this investment set the stage for the future expansion. Our PAT during this quarter is 4.69 crore as against 4.110 crore in the fourth quarter of financial year 23. PAT margin stood at 10.28%. EPS for this quarter is 2.92%. It's 2.92. Coming to the full year, which is the financial year 24 numbers, our financial year 24 top lines rose significantly by 87.6% year-on-year to rupees 155.37 crore. This remarkable feat was achieved based on the strong demand for our services, coupled with synergies from the recent merger. Our EBITDA, excluding other income, for the year expanded 25.9% year-on-year to rupees 21.48 crore, while EBITDA margin is 13.80%. Continued investment towards strengthening our skilled workforce and software optimizations impacted margins. These are strategic investments towards building a strong base to cater the anticipated surge in demand. Our PAT during this year showed a phenomenal increase of 46.0% year-on-year to 16.12 crore as against 11.04 crore in financial year 23. PAT margin stood as 10.16%. EPS for this period is 10.04. This robust performance reflects our strategies and execution, and with the inclusion of Cloud Tech, we expect even higher benchmarks in the coming quarters. That is all from our side. We can now open floor for the question.
Sir, should we open up the floor for question and answer?
Yeah, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Hope I'm audible.
Yeah, you're audible.
Yeah. Hi, sir. So, sir, we've had fantastic growth in the last 2 years, sir. So what kind of growth can we expect in the coming years, especially maybe FY25, because we've just added the cloud business. So any color on that? And our margins were impacted because of our mergers and another investment in IT. So what kind of margins? Can we go back to our historical margins of 20% plus?
Okay. So basically, let me give you a little size on the business point of view. This market, in terms of like digital, Cloud Tech and MarTech, both are expanding globally, not just in India. And we really anticipate that, we will really have a good growth trajectory on that. We are expecting at least around 25 to 30%, CAGR growth on year for at least next 5 years. And we're expecting that, maybe we may achieve more as well by looking at the market, and the growth which is happening in the market. Definitely, we are at the growth stage at this moment. So obviously our focus is to capture more and more market, and that's the reason why we are investing more on the people, talent pool, and the software and structure, so that we able to reach out to the more bigger market, and that is the reason why the profit margin would impact. But definitely at later stage, this margin will improve with getting a more better ARPU, average revenue per user, by being both the businesses helping each other.
So maybe the next year also we will have similar margins as FY24. Is that what we are saying, sir? And just also wanted to ask, so in the current year, how much was the contribution from a cloud? Because we, I think, acquired in March, correct, sir? So that would not be completely consolidated in the current year?
Correct. Yeah. Yes, true. This is not the complete sales belongs to cloud, because this has been recently, all the numbers have been recently merged. So it has only few months data which will be added into the current result. But, next year, obviously, you will start seeing the growth and you start seeing the numbers for the segments, where, we'll be able to have multiple growth on that side.
So, sir, how much did the cloud business do on its own in FY24? So that will be completely added to our current base, right, sir?
Right. So not complete full financial year has been added to this, because this is only with effective of 22nd of February 2024.
Yeah. So, sir, in FY24 we had 1 month of cloud business. In FY25 we'll have 12 months. So how much would be the additional? What was the run rate for the cloud business, sir?
So generally, we are expecting that, we do not have exact number on how the business will shape up in terms of the next year. But generally, we're expecting that, we have a major stake on the MatTech, and CloudTech is definitely started and adding up over here with the MatTech customer. So that will also keep increasing on it. So maybe, you can have an average like maybe 60-70% we're expecting on a MatTech kind of a business, and 20-30% on the CloudTech side of a business to start with. But definitely it will keep changing the way we will start expanding the various markets.
Okay, sir. Fair enough. If I have any other question, I'll come back and take it. Thank you so much.
Mr. Ashish to add over there. Just a second.
Yeah. Hi, Darshil. Mr. Darshil, sorry. Both business, CloudTech and MatTech, are complementing each other. Okay, so the impact in this coming year will definitely be there with respect to the complement in nature. There are certain customers can be shared between both the businesses, so definitely there will be a major impact in terms of the revenue for the organization. Hope this helps you in the understanding the impact, what can be possible.
No, fair enough. I just wanted to know that how much revenue has the CloudTech business done in FY24, so that, we can extrapolate that into FY25. That was the only, because it was not completely reflected in our FY24 business. That's the only.
That's right. No, I completely understand. Definitely we are working towards it, and we will have a much more visibility in terms of, because there are certain costs are also shared between both the department, both the businesses. But it's a little difficult for us to present the details about the bifurcation, but our auditors, our finance teams are working towards it to make it much more visible for everybody here in for our stakeholders.
No, fair enough, sir. Thank you so much for answering my questions. All the best.
Perfect. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Neha Jain, who's an individual investor. Please go ahead.
Hello.
Yeah, hello.
Hello. Yeah, good evening, sir. I just had 2 questions. Sir, who would be our top 5 customers, and what percentages revenues do we generate from these customers?
Okay. So we do not have any customer having more than 20% of revenue belongs to a single individual customer. Our major customers are various agencies across the globe for our MatTech business, and for our CloudTech business is our major integrated service provider and domain resellers. They are our major customer across the globe. Currently, on the CloudTech side, we are having customers in more than 100 plus countries, and having more than 10,000 plus resellers. On our MatTech sides also, we would say, like, including publishers network and the advertisers network, would be more than maybe 15,000 total publishers network, and maybe like more than 300 plus different agencies are working on it.
So, sir, these customers will be on subscription basis, and they typically will be renewing their contract on a yearly basis, or it's a one-off project kind of a thing?
Okay. So we have a multiple product model with our customers. So for example, for a cloud tech business, we have, say, for example, domain registration is one of our products, which is a kind of a subscription model where, year on year you keep paying to keep renewing your services. Same for cloud tech, cloud services, it's similar, like, year on year keep renewing with us. At the same time, when it's on a MarTech side, we have various agencies. Either they're coming up with a year-on-year contract or as and when contract. So it's purely depend on the nature of different kind of a contract we have and the different products we have, which is helping this customers.
So, sir, will we be able to bifurcate in terms of percentage of revenue, how much of our business will be from a one-off basis project and how much will be like a subscription model?
We do not have a real bifurcation on that, but definitely, we have a different other performance KPIs, which we keep working on it. Because see, this is very dynamic side of business where we have so many different products. And with each product has then it becomes very difficult to, line items, all of those structures. But still we are working best to see how, whatever way we can be more transparent to our investors on the size of the businesses and splits of the businesses by just taking care of the business secret which is required to be taken care for the betterment of the organization.
Sure, sir. And just one last thing on the subscription model. Do we have any matrix where we are able to understand what is the retention rate for subscription?
Yeah. So it's, as I said, this is purely depend on the size of the client and the nature of the client. But generally, we have a retention rates of more than 70-80% of these customers who keep renewing their businesses, unless and otherwise, either they have a issue with their existing businesses or their own business model. But generally, if you look at it, because we as a Virtuos, whichever product line we are kind of an essential services. We believe ourselves as an essential service provider for them for the growth of their business. So maximum time, they keep continue doing business with us unless until they have any specific issue or, there are certain things where things are not matching with us.
Sure, sir. Sure. Thank you so much and good luck for the future.
Thank you so much. Thank you so much.
Thank you. The next question is from the line of Vinayak Mohta from Axia India. Please go ahead.
Yeah, hi, good evening. Am I audible?
Yes, you're loud and clear audible. Please say.
Yeah, perfect. So, sir, the first question that I had, I just wanted to understand, we are, from a competition standpoint, we are in a business which is similar to what more or less Apple does, might not be one-to-one. So just wanted to understand, how or any other competitor, how are we able to differentiate ourselves from, an execution standpoint for a customer to be attracted to you? Could you give some metric, for example, the other company does tell us if they have got the latest quarter execution that they have done and how that execution has panned out in the last 1 month or 2 months, so that we get a sense of, the execution capability that one has. So just want to understand how does Virtuos differentiate itself versus the customer within this space? Versus the competition, sorry. Yeah.
Sure. So I'll try and explain you with little more information on the other side as well. So every company has a different way of acquiring the customer. But just to give you a landscape of this market itself has its own pie, which is every day increasing. We believe that, in this particular industry, there are so much of requirement of so many companies to help the customers. See, the companies like us are enabler to the companies who are seeking for the growth. And this is like, any sector agnostic. So any company, say, for example, who wanted to go for digitization and who want to acquire customers in a faster way, require a use of data and technology, and the companies like us, they can really help them to grow and help them to get the customer acquisition at the better price with the speed. This era is not the era of small and big. This era is the era of speed in terms of speed and in terms of fast and big. So those people who wants to be fast, who want to achieve the success fast, they really require companies like Virtuos to help them achieve their growth. So here, as I coming back to the question answer, what is that USP we bring on the table? Definitely, it's the data and technology, which really helps the customer to get the more better, precise targeting, precise marketing, and precise customer acquisition. And end of the day, that's going to be always an added advantage for companies like us to get the better results and better ROI for the customer. I hope I answered your question.
Yes. So from what I could decipher, it's just such a large market and growing by the day that customers there'll always be room for multiple players to coexist. And with time, as more and more data gets evaluated on your backend, your efficiency on an execution standpoint for the customer keeps on increasing, thereby driving incremental value for them. Will that be a good summation of the same?
You got it very right. Yeah. So it's absolutely, it is on the right side. It's all about say, as I repeat again, it's all about their speed, the fastness which they are looking at. Okay. Data and technology always helps them to grow. And we are a tech company. We're not just an advertising company. We are a tech-based company which is helping by using, various AI technologies and whatever way we can help them to get their growth faster. So you got it very right. Perfect.
Perfect. And is it fair to assume that Cloud Tech adds on to the MarTech business, wherein these customers who want to go digital, you can additionally upsell your services and thereby garnering incremental revenues from the existing customers itself?
Yes, one way. So it's very simple. For a MarTech business, Cloud Tech is a background. It's if you really want to grow faster, you have to have a cloud. You have to have a cloud services. You have to have your applications on the cloud. So it's obviously a kind of a complementary business with the MarTech services for internal consumption as well as for the external customer to whom we're looking at the bigger expansion.
Understood. So coming down to your margins, margins have been quite high historically. But right now, you did mention in your press review that because of investments within the business and some front buying of the inventory that you had to do on the ads front is where your margins got impacted. So what I wanted to understand more of, on a sustainable basis, how do the margins differ between the two businesses? That's the first point within this question. And the second point is, have we had to undercut our foods, for example, in order to garner more customers, and that is having an impact on the margins as well? So just trying to understand that once we are done with this investment phase, how do you see this margin trajectory evolving? Because we've come down from a high of 24-25% to now as low as 11 to 14% to close this quarter. So just wanted to understand how we are placed as a company from that standpoint.
So margin generally stands between, if you look at overall, it will be between 8 to 12% of a PAT margin is what we are, in general, we are expecting. See, end of the day, it's all about the ARPU, which will always increase the margin. So when you have a multiple product lines, your acquisition of customers become a much cheaper, and then you're able to sell multiple products, which can definitely help you increase your margin. And that is what we are working as well. And we are getting customers. So, for example, we have a domain customers get acquired for as low as maybe $1,000, and maybe a Cloud Tech customer and maybe acquired for maybe like 500,000 rupees, or maybe MarTech services customer maybe for 20 lakh rupees, right? So now different sets of customer gets acquired at a different price line, and at the same time, each customer acquisition cost differs. But if the moment everything gets together, the overall ARPU at the same time overall acquisition cost get changed.
So from an operating margin or EBITDA margin standpoint, we could look ourselves being closer to that 18 to 20% range on a sustainable basis. Would that be a fair assumption?
Yeah.
Over a longer period, once we are done with the...
Yeah, you can say that. We could be there between 15 to 20% of EBITDA margin kind of a thing, which we should be achieving.
Understood. And so you had also talked about in your presentation about a potential inorganic acquisition. So what segment will be, and addition to that, you did also talk about a potential fundraise. While I understand that you might not have constrained onto a number or so, but just wanted to understand what is management thinking in terms of, which segment do they want the acquisition to come through, and what is the size of acquisition that we are looking to do in case we go ahead and do one?
Okay. So we are evaluating various different options on the organic as well as inorganic both the sides. it still is an initial phase of that. The moment the concrete information comes up, we'll definitely share on the public forum with the investors and stakeholders. But, we are open to see where we can get the more customers get acquired and be able to help our existing product line to serve those customers. And just a second, I would like to also add here, so you help. Just a second.
Hi, Vinay. So with respect to the acquisition side, so we are looking for both the sides, especially on the MadTech and Cloud Tech. Okay, both the sides we are looking for the various options. And on all of these options, we are just figuring out the best potential strategic opportunity for us. Either that strategic opportunity can be, as Hirenji mentioned, that could be a customer acquisition, or that could be also the technology acquisition, could be the opportunity for us in terms of an inorganic side.
Understood. Just two suggestions, going forward. If you could just give us an understanding of any ARPU metrics that you guys internally track and how it has evolved over a period of time, like the competition does. What it helps us understand better is the sustainability of the, revenues that you guys provide. So, basically, if from a longer term viewpoint, I think if you have sustainable revenues coming in from a client on a per unit basis, it just gives the market confidence that the sustainability on the revenues and the quality of work that you provide to them is significantly high relative to how the market is. And secondly, if you could also give some case studies like the competition does again, it gives us an understanding about the quality of customers you work with and how your delivery pans out in those short period of time when the order follows through. So that's just two suggestions you can evaluate on your basis if it's that possible. That's it.
Definitely point taken, and we definitely have internal metrics currently. So certain metrics, because the nature of our business is on the two major side. One is the Cloud Tech and the MadTech. Both has got different metrics to be measured. Okay, so we internally measure certain metrics in terms of the revenue per partner. Okay, overall average query per second, what we are receiving on our infrastructure, what is the revenue we are doing on those query per seconds. So these are the internal metrics what we are following, and definitely, as you rightly mentioned, this will give the investors or a stakeholder a different level of the feedback and different level of the interpretation, and can be helpful for judging the performance. Your point taken, sir.
Sure, perfect. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Nikhil Arora, who's an individual investor. Please go ahead.
Thank you for your opportunity, sir. Sir, I want to ask a few questions. I actually wanted to know, who would be our top 4 or 5 customers, and what kind of revenue do we get from the top customers?
We have various agencies across the globe and various domain and ISPs, who are buying the Cloud Tech services from our server. We do not have any customer which is having more than 10% of a business which are having from each of these customers. And generally, if you look at the kind of a customers in India or abroad, we have top agencies are our customers, like, for example, Dentsu Group, there's WPP Group, Publicis Group, those kind of companies as our customer.
Okay, so got it. And sir, any geographical split of revenue that you can provide, like which region gives us the highest share of revenue?
So we have currently, India and international business is what we are bifurcating, and we have around 70 to 80% businesses outside India, and around 20 to 30% is what we are doing in India, and we're working towards getting more and more India story expanding, where we get the more and more customers in India as well. And that's why recently, if you see our, just what Ashish has mentioned, that we started operations in Delhi, and now we're starting a few more operations in other part of the India as well.
Right. So, sir, what would be the opportunity size abroad versus India? If you can just throw some light over here.
Sure. So, see, if you look at the India overall growth, definitely we're into double-digit growth in India story. And globally is a kind of a matured market at few of the grown country. But at the same time, there are countries which are growing countries where also there is a good opportunity. So what we're working is that we already have a good handhold and good support system in the US, which is a very grown and matured market. So we're trying to encash those opportunities from that part of the world. But at the same time, India is definitely at altogether a different story as our Indian political structure, and which is helping us, all of us, to go together in the digital side of the India. So we really hope and we're really bullish on the Indian market also to grow a little more on a higher side as well.
Okay. So we expect similar kind of growth in both the regions, I mean abroad as well as Indian.
Correct.
Okay. Thank you so much, sir, for the opportunity, and wish you all the best for future.
Thank you so much, Nikhilji.
Thank you. As a reminder, if you wish to register for a question, please press star and 1 on your touchtone phone now. Our next question is from the line of Rahul Sharma from ABS Invest. Please go ahead.
Good evening, sir. Thanks for the opportunity. My first question is that, as I see that we have two business verticals, one is the MadTech and another is the Cloud Tech. I want to get a sense that what is the revenue contribution from each vertical, and at what PAT margins are we servicing that? My reason for asking this is because if we see that on a YOY basis, our revenue has grown substantially, but if I see on a quarter-on-quarter basis, our revenue has declined. So I just want to get a sense that what actually is the revenue that we are getting from each vertical, and what kind of advantages in terms of cost we have in each vertical.
Okay. Hello, Rahulji. So first of all, this Cloud Tech business has recently been part of the company being, it got merged by this February 2024. So we do not have the directly bifurcation between the Cloud Tech and the MadTech businesses sizes. But at the same time, we have a various shared resources which has been used by both of these units. So it's become very difficult to exactly getting the right PAT margin between both of them. But we are generally anticipating between 8 to 12% of a PAT margin for all of our businesses.
Okay. Right, sir. So, sir, maybe, from next year, we can have a bifurcation for both the verticals, despite having, shared resources, so that, it will be easy to value both the verticals.
Yeah, we are working very hard with the team to say, whichever way we can be more transparent and more clear with our investor as well as for internal team as well. Because all teams are, working towards getting more and more PAT margin, more clarity with them is always better for them as well. So we are working very hard towards it, and very soon you will see certain information on that side as well.
Right, sir. Right. And also, sir, if you can, throw some light on the business opportunities that are currently visible from the perspective of next 6 to 9 months for both these verticals.
So I would not suggest for the short term of the 6 to 9 months, but definitely for next 5 years. The story, see, as I mentioned in my earlier questions answered, India and global both has very good trajectory in terms of growth for digital, because we are not an kind of a luxury to anyone, but will be more of kind of an essential services to people who wants to grow their business. So we'll be counted as enabler to them. So we really expect that there is this pie getting increased day by day, and there's definitely cloud was blessing in disguise, which has helped everyone to getting more and more digital and get the importance of digital little more faster than what they're supposed to do with the speed of the information which they used to access. So there are a lot of opportunities which is coming up, and being a complete stack provider from a Cloud Tech to MadTech, we'll be partners with these companies on the growth story. So, please just wait for some time when you'll really see a good growth of your company.
Sure, sir. Sure. Right. Second question, sir, what I had is that if you can, just throw some sense of light in terms to, what kind of talent are we hiring into our company? Whether it is an experienced or what kind of people are, because as I see that our employee expense has increased during the quarter as a percentage of our top line. So you can just, give me some sense on that.
Right. So as I mentioned in my earlier answer, we are in a kind of a tech company, okay, which is working towards more of a technology and creating a robust product. So we definitely have a good pool of a tech team and tech people, and that is a part of one of the hiring. Another hiring that definitely on the business side, where we are expanding our market and we are keep reaching to those places, where we able to increase our reach. So our majority hiring either on the tech side or on the business side, which help us to grow further on those markets.
Right. So another question what I had is, that we see that on a YOY basis, our depreciation has increased. And if I, get into the minor details of the balance sheet, so we have added, to the property, plant and equipment and also to the intangible asset. So if you can give me what kind of assets have we acquired over this last year?
So our majority assets, if you look at the other way around, are generally on the tech side. But still, I can get you more detail on one-on-one with my CFO from my finance side, so get to the more data on the same.
Right, sir, right. And so just last one question. Is there any particular reasons that we are having, very low tax rates?
As we mentioned, Virtuos is a global company. We have various different units in the different part of the world, including a few of the countries where the tax rate is very low. So if you look at the overall consolidation, the tax rate goes a little lower than what is required. And as I mentioned in my earlier answer, our maybe 60-70% plus businesses outside India.
Right. So, sir, this will be continuing going forward as well, looking at our business models?
So we are at the growth story right now. So, we are working towards each and every opportunities to see that, how we are able to expand our business. Our focus wouldn't be towards doing savings and structure, but it's all about getting in more and more opportunities so that, your company can really grow fast.
Right, sir, right. That's it from my side, sir. Thank you so much.
Thank you so much.
Thank you. Participants, you may press star and 1 to join the question queue. The next question is from the line of Manoj Rajani from Manoj Rajani Family Office. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible loud and clear.
Yeah. Hi, sir. So actually, wanted to ask, basically our rationale behind establishing the 3 to 4 new subsidiaries in the US, and what also wanted to understand what activities will these subsidiaries be involved in?
Sure. So we, if you have seen the overall org structure, we have so many different subsidiaries and different businesses we have. So we generally, it's all purely from the business perspective. There are certain size of contracts that comes with a specific size of the size in terms of the numbers. So we try and see if we're able to cater them with a different set of the units, and we try to get the more business for the Virtuos. That's one way. And second thing is definitely each of this product line has a different size and a different customer set also. So that, and sometimes, as you've seen that, few customers are only working with a few companies because they do not, and when there's the competition related requirements are there. If you've seen this in agency business model, you would understand a little more on that side. That's similar to the same business model.
Certainly, sir. And sir, then we are in this the basic question. We are in the tech business. So do you see any do you foresee any threats, due to this tech?
Yeah. Sure. Let me have Ashish answer on this, please. Ashish.
Yeah. Manoj, sorry, I didn't understand the way you mentioned what tech related. Can you say again?
Yeah. So basically, does the companies anticipate any risk due to posed by the technological advancement?
Not really with the technological advancement, but just I wanted to let you know the overall this industry is less than 20-year-old industry. Like say, I'm sure as you see, the internet has been in the existence for approximately around 25 to 27 years in the existence. So being said that there are a lot of policy implementations are happening across the globe, be it something with respect to the privacy policies and stuff like that, which is overall helping keeping the user at the center and helping them to establish the policies. And all these policies brings the different types of the opportunity for the businesses exist in this ecosystems. Okay. So essentially from a threat perspective, if internet goes away, definitely that's the biggest threat. That nobody is foreseeing at this point of time. Apart from that, any other threat we can't foresee at this point of time.
Okay, sir. Fair enough. And also, sir, wanted to know about the direct service expenses. So, like, there has been a huge 25% decrease. So, in this quarter. So, on the annual basis as well, there has been a percentage as a percentage of sales it has decreased. So, like, what is the primary reason for this trend?
One sec, I'll have Mr. Hiren to answer on this. Yeah,
Hi. So, see, as I mentioned in my earlier answers, the company is currently on the growth stage. So we are working towards to see, whichever way we are able to acquire more and more customers and be able to serve them. So currently, those margins and those numbers you might feel little here and there, but slowly you will find it very consistent basis on that side, and you won't find too discrepancy on the same time.
And the last question, so operating and other expenses have increased in value. So what expenses are included in this category? If you could just throw some color on that.
Maybe what we can do is I can have you send it those details from my finance team on a detailed way, so that we can take this on a separate line.
Sure, sir. No worries. That was my last question, sir. Thank you so much.
Thank you so much, Manojji.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Hiren Kumar Shah, Promoter and Whole-Time Director from Virtuos Advertising Limited, for closing comments.
I thank the entire team of Virtuos for their untiring efforts, hard work, and dedication, which drives the company forward through the various market conditions. Also, I thank all of you for participating in our conference call. Please do get in touch with our investor relations team for any further question. Thank you so much.
Thank you. On behalf of Virtuos Advertising Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.